Hey guys, welcome to today's video. So on today's video, I'm going to talk about the impact of geopolitics on the world of investing. I'm not a geopolitical expert, but my training is in finance. So I'm going to relate whatever little I can understand about geopolitics to the world of investing and finance. This becomes an extremely critical video in case you are investing in the US, in case you are investing in the Middle East, you're buying more Indian equities, American equities. So this video becomes important. At least you should understand the economics side of the argument. Without wasting any time, these are the topics that I'm going to discuss. I have prepared an Excel spreadsheet for you in a way, and I will keep populating it with logic, reason, and data. So 5-6 key things that we will study. Number one is that I believe that in 2026, we are seeing a race for reindustrialization. Especially US has gone and it has attacked like Venezuela. US and China are colliding head on. Some people are saying that US-China is going to go and capture Taiwan now. So a bunch of things are happening there. Why is it happening? My understanding is that this is a race for reindustrialization, especially for the US. So I'm going to talk about this, what this means, why this is happening, and the implications for you. Similarly, we will discuss the timeline of fight between US and China, how 2026 AI race is shaping this world of reindustrialization, where India stands on this. We will talk about why is it that US has gone on to capture like Venezuela, Taiwan, China might capture, Greenland, US is already looking at, Middle East, a lot of things are happening there. What is the role of global reserve currency in the next 10 years? What's going to happen? Is the US dollar going to collapse? Is gold going to become the apex currency in the world? Or is China going to come into the equation? We'll discuss that. Where does India fit into all this? What will be the role of commodities? Where will the stock market go from here? How to diversify? This is the last piece of critical information that I will give you. And I will just populate everything, key points that I'm talking about. So without wasting time, there is a lot to discuss. So I will jump right in. My simple request would be that if you find the details that I'm presenting insightful, do like and subscribe to the channel. I talk a lot about investing. I actually put in my money and show people. Okay, so this is very, very rare. Most of the YouTubers just come discuss like broad topics, but they don't talk about how they are investing their money. I invest. My training has been in finance. I have worked with 2 of the top 5 consulting companies in the world. I've gone to a top 3 MBA program in the world. I have taught at different business schools. A lot of things, if you go and check my background, you will know all this. I professionally manage money now. So that's about me, and let me kickstart the conversation. So let's first and foremost start understanding the story by the concept of reindustrialization and industrialization in general. So if you look at the last 3-4 big empires, right, be it Portuguese, Spanish, the UK or United Kingdom / Britain Empire, all this was built on industrialization. Industrialization simply means that you go and build things of value and you export it to the world and the world pays you, right? So this is very simple, not too complicated to understand. You can understand it. For example, Spanish and Portuguese Empire, 1600s, 1700s, they were really big. Why? Because they did something called as shipbuilding, right? So they were exporting things of value, right? The shipbuilding thing that it allowed it to do was that it allowed them to capture the ocean trade. They could move fast, there was transport efficiency, they could bring goods from point A to point B, and they had a competitive moat when it comes to industrialization of ships, one could argue, okay? Then we move to the UK or British Empire. Now that was the modern industrialization in a way, right? That's where factory output model came into existence. They used to have Manchester Mill and India was a colony. That UK used to get a lot of money from the India as a colony and African colonies, etc. They used to get cotton, go and manufacture like it in Manchester, which was the t-shirt or cloth making business. And then they used to use their ships, economic might to export it to the world. Again, that's second key empire. What about US? So late 1800, 1900, you had like railroads, you had factory automation with Ford Motor coming into the picture. It started doing exceptionally well. US exported stuff. Then we had China, maybe around early 2000 plus, right? So from there, China also industrialized. So I hope that you got the concept of industrialization and why is this so important. In very simple economic terms, what industrialization allows a country to do is that it allows them to export more of things which are of higher value and import less, okay? Or they import, right, but add value to those products. These are called as value added services, and then export. So net, what is happening is that this brings in flow of money or flow of foreign money into a particular country or an empire. This happened with British Empire, Portuguese, Spanish, China, US, everywhere you look at, okay? So this is why industrialization or having a big manufacturing base is extremely critical. Why? Because it brings foreign dollars in, okay? Now, there are some countries where the GDP per capita is okay. For example, if you look at Thailand, then GDP per capita is somewhere around 10,000, 11,000 US dollar. Now, it's not deeply rich, but you can't really term it as a poor country, okay? It's still 5 times that of India on per capita GDP basis. Why is that the case? Because what they are exporting is tourism, right? So, for example, Bangkok is the #1 visited city. It's kind of a good that people, Italians come or Portuguese people come, they visit, spend time in Thailand or whatever, and they are bringing foreign dollar in. So the equation is very simple when it comes to industrialization. The goal is very simple, that what you're doing is that you are basically offering things of value which increases or improves your export. It allows you to bring foreign dollar in. It's as simple as that, okay? So what's the situation like in 2026? Where are we, right? So for understanding what's happening in 2026, there are a couple of things that are happening. Number one is that basically AI has come and this is going to disrupt something called as a factor of production. I'll speak about it in a minute. The second key thing is that in 2026, one could argue that China has an industrial moat. Now, what is the meaning of industrial moat? It means a competitive advantage when it comes to manufacturing. Right from manufacturing toys, right from manufacturing Diwali diyas, right from manufacturing Holi Pichkari, you look at anything, China is a giant when it comes to manufacturing. And the way this system was working out was, and let me just write it down so that you guys understand it better. So if we go to the 1980s, China was a very poor country, right? US and China were not even comparable entities. But if you fast forward, maybe like 35 years, right? At least from like maybe like 2010 onwards or 2015 onwards, people started comparing that, you know what, China is a rising giant and we will move towards a bipolar world. China gathered a lot of steam. China gathered a lot of eyeballs. Why? Because there was an economic competitive moat, right? Economic competitive moat that China had. What was the winning advantage for China? Well, it was its ability to manufacture things cheap, but at a fairly okay value, okay? Now, what is the meaning of this, right? So let me help you understand that the goal of production is not that you build things cheaply. The goal is that you are offering value for money, right? So that's what people look for. That, for example, if like, for example, an African country can go and manufacture a pichkari at, let's say, 5 rupees, okay? And China can do it at 6 rupees. That does not mean that automatically, like, people will start buying Holi pichkari from African countries. No, people look for value for money. So it's the cost at which we are manufacturing, but also the quality at which you are manufacturing. So when it comes to that value for money offering, China had a moat. Why? Because they had like lax labor laws. A lot of good things were happening, etc., etc. Giga factories, easy to scale up in China. You can displace the villages, whatever, right? So because of that, China actually built a massive competitive moat. Now, what has happened in the last 35 years is that China has become a very strong contender to the US when it comes to capturing the #1 economy in the world tag. For example, in the US, what was the model? The model was very simple that, hey, US is exporting, right? Exporting dollars or US dollar to the world, right? And the US dollar kept on appreciating and going up in value. But China, what it started doing was that China was actually exporting to the US, which means that China was actually making money and US was losing money. Why? Because US was exporting dollars to China. A very simple example is that, let's say, if 100 blocks of good, whatever you term it as, Diwali diya or whatever it is being sent to the US, what will happen, right? These guys are manufacturing these 100 blocks of goods and they are sending it to the US, right? Now, US gets goods. Now, in order to buy those goods, it has to send this US dollar to China. So China became one of the top countries that started aggregating US dollar, and with that, it started investing in US oriented assets like US bonds. Okay. Now, as a result, slowly, if you look at the trade deficit between US and China, it scaled, right? In simple words, China started exporting more and more goods to the US. It created a manufacturing base. And US started exporting a lot of US dollar, right? So this was the equation, and this equation only magnified with time. And as a result, US became a net importer nation, not a net exporter nation. Now, what happened is that when Trump came to power in 2016, right? And then again in 2024, his agenda was very clear. His agenda was reindustrialization of America. Now, what is the meaning of reindustrialization of America? It's very simple, right? Basically, their goal is to manufacture more. Now, when can you manufacture more? They went and studied the Chinese model. Now, why is it that China is able to scale so fast and manufacture so much? So this brings us to the concept of factors of production. Now, this is a concept that was given by Adam Smith, I think, who was a prominent economist, right? And he spoke about 4 factors of production. There is something called as land, there is something called as labor, there is something called as capital, and there is something called as entrepreneurship. Okay, so these are 4 factors of production. This has stayed constant throughout history. This hasn't changed. Now, if you go back and study the world, right, in let's say maybe like 1900s, 1990s or early 2000s, what was happening was that if you look at the labor cost in the US, this was extremely high. For example, let's work through a very simple example that if, for example, a software engineer sitting in the US could do a piece of work at $10,000, the same work can be done by an Indian engineer almost at equal value, maybe at 1/10 of the cost. So therefore, right, I mean, if you are maybe like 35, 40 years old working in IT, you will understand this more, that there used to be off-sites, right? What is the meaning of off-site? It means that, 10, 11 months you will stay in Hyderabad or Pune or Mumbai, wherever in India, you will work out of Infosys or TCS office there. And for 1 month, you will be sent on off-site, or maybe 6 months, you will be sent on off-site. What is happening? So India had a labor arbitrage, right? Why India had a labor arbitrage? Because labor was very cheap. That was the competitive advantage of India. What was the competitive disadvantage for Americans? That their labor was very expensive. Now, what's happening in 2026? In 2026, we have AI, right? Artificial intelligence. A large chunk of our TCS workforce, Infosys workforce has been displaced. Why? Because AI can actually go and replace these software workers, right? This is happening. Now, this is happening in factory model also. For example, here is a video of Toyota manufacturing entirely by using robotics on its assembly line. So what kind of people is Toyota AI manufacturing displacing? It's displacing low-end or low-skilled workers, okay? Now, this is happening. So basically, like if you go back and, let me just go back to this point again. Let's see, land was always there with America. America has almost like 3-4 times land, that of India, if I'm not mistaken. Labor was cheap. This was a bottleneck, right? Capital was always more in US compared to that in India or China, right? So they already have this. Access to entrepreneurship is basically a combination of these 3 things. But again, right, I mean, one could argue that US has a strong entrepreneurial ecosystem. So in 2026, right, people are calling Trump an orange clown, whatever it is. Those make for good political rhetoric. But he's not stupid. Okay, so why? Because he has all these 4 factors of production jacked up by AI. Okay, so now if he can go and exert geographical influence on a bunch of different things, right, and play the geographic aspect of the economy really well, geopolitics, then there is a chance that America could reindustrialize. And this is a very important point that is at the center of Trump's policy. And if you understand this point as an investor, you would understand where the world is heading and you can make better investment decision. So I'll speak a little bit about that, right? So let us now start answering some basic questions and let me populate this chart, right? So this chart I'll keep on referring, right? So, okay, so now I discussed the need for reindustrialization. Why is it required? Because it's very simple that China has been winning the race for the last 30 years. Moreover, America had a competitive disadvantage. Now, with the advent of AI, where robots can make other robots, robots can replace TCS Infosys worker, robots can replace factory workers, the labor arbitrage is gone and America can actually become reindustrialized. Okay, so this is step 1 of the entire ecosystem. Now, what is the implication for you, right? So let me just write it down here. So the implication for you or us is that India's labor arbitrage is gone, right? This is a fact, right? We can all keep on debating it that, government should do this, upskill this, that stuff. See, we are already late on this. Okay, it's as simple as that. This is happening. This is a trend, right? It might go at a slower pace than what you and I are anticipating, but this trend is already visible. Okay, so this is part 1 of the story, but this is not the complete picture. To understand the complete picture, what you need to understand is the genesis of the fight between US and China. What exactly is it that they are going and fighting about? Why is it that US is going and trying to capture like Greenland? Why it has captured like Venezuela? What's the thesis like? Will China go and capture like Taiwan or something, right? So what's happening there? See, basically what's happening here is that the genesis of the war between US and China is reindustrialization or the race for it. Now, in order to reindustrialize a society, 3-4 things need to happen. Number one is that you need access to resources. This is common sense. For example, when Manchester Mills used to a Manchester Mill in Manchester, UK, 1700 odd period, what was the bottleneck there? The bottleneck there was cotton, right? That India was a cotton country for them, that a lot of cotton crops can be produced, right, in India. So British Empire came, extracted that cotton, went and made like mills in Manchester and made like t-shirts with it. Okay. Now, okay, so that's part one. Part two is strategic access. For example, if you look at South China Sea, okay. Now, South China Sea is a strategically important access point for China. Okay. It literally controls South China Sea, right? My editor, I'll ask him to put like the graphic here, right? You can see the proximity there. Because it's very easy for China to exert its influence given its geography, right? It can send its vessels easily. It can look at whatever is happening there. The nations are smaller in that region, so they can go and, sort of pick fights with them without worrying too much. But if you change the example that, hey, you know what, China has to exert influence on Venezuela, right? Now that's very strategically far off. It's like saying that, okay, Russia, right? Why doesn't Russia go and attack like Germany? Okay. There are a lot many countries between Russia and Germany. Okay. So long story short, people keep on asking me, why is it that, China is not attacking US? Because US has gone on and captured like Venezuela. The reason is cost of war is very expensive both for the US and China. You have to study a cultural point here that China has made a lot of sacrifices in order to get into a position where it is at currently. One stupid act from the Chinese government can start a World War III between US and China, and that would be end, right? The decades and generations of progress would be thrown away. And China, unlike the US, hasn't enjoyed prosperity, okay? China has grown, it has developed dramatically, but is it prosperous, right? I mean, do you see like everyone buying a yacht and whatnot stuff, like the blatant capitalism that takes place in the US? Has that happened? No, not yet for China. So China has more to lose, right? And third is control of supply chains. That in order to reindustrialize the society, what is it that China and US need to do? They need to control the entire supply chain. You cannot have like a country who can say that, you know what, we are not going to supply you rare earth metal, kar lo jo karna, right? So then it becomes a problem, right? I mean, you might have everything going for you and suddenly you don't have access to rare earth metal and you're screwed, right? Your entire supply chain is screwed. So right now, both China and US depend on each other. What is it that they are depending on? Well, US gives access to market or access to its customer to China because US is deeply rich. It's much richer than China. So whatever goods are being produced in China right now in 2026, a large chunk of it gets sold in the US. What is it that US gets out of by buying stuff from China? It gets access to supply chain that will eventually help them reindustrialize at some point. So this is a back and forth dance that is going on between US and China. So will they attack each other? It looks unlikely, irrespective of however crazy Trump is and whatnot stuff. Okay, so this is where we are. So hopefully this answers the question why US has gone on to capture like Venezuela. Can China capture Taiwan? The answer is yes. Why is it that US is capturing like Greenland and whatnot, right? So it's because of these three things: access to resources, strategic access, geographical access, control of supply chain. One quick example I'll give you that in Greenland, US has one of the most important military bases, right? It can act as a buffer between US and Russia. So these two are again enemy states, one could argue. So Greenland acts as a buffer between them, okay? So this is important. So, okay, so what needs to happen for the US to reindustrialize? So you might be reading about the fall of US dollar. Even I have made multiple videos on that topic. And people keep on thinking that, suddenly US dollar will vanish and US economy will collapse. And it will be world minus US and everything else will be great in India, China, like, milk rivers will be flowing and whatnot. That's stupidity at scale, okay? See, here you need to understand a little bit more about how a country reindustrializes and what things benefit them when they are trying to reindustrialize. So for example, if a country, for example, US, right, and US dollar is extremely strong, what will happen? Well, exports will not be high, okay, or exports cannot be high because it's so expensive, right? And they can only do luxury exports then. Easy way to understand this is that if you look at what China has been doing for the last 20 years, China has kept its currency debased, or whatever the real value of yuan should have been, It is not. Okay. Now, for the last 1.5, 2 years, since the time gold and silver have kind of given a run up, the US dollar has come down, right, in strength, right? This can be tracked by tracking something called as DXY, or the strength of US dollar compared to other global currencies. Now, DXY as an index has come down. It is expected that this year again, USD is going to fall by 4% compared to other stronger currencies like Singapore dollar or Swiss franc. Okay. Now, this is the nature of reindustrialization, that a country which is trying to export more or trying to create its industrial base, it wants to keep its currency cheaper, okay, because it helps them export more. Then a natural response comes, because my audience is very intelligent, so they will naturally ask me that, hey, by that logic, INR falling to 150 is great, then we should celebrate our genius politicians who have kind of destroying our currency. Why do we keep talking about, like, INR hitting 100? Why are you giving all that gyan that, okay, INR falling to 100, 120 is a bad thing? Because we are not net exporters, and neither we are building our industrial base. Now, as I explained at the start, let's see, it's about value for money. It's not about that, okay, fine, you can manufacture like this pen, right, really cheap in India. But if this pen is not demanded across the world and if it offers very less value, what's the point? Okay. So long story short, the industrial goods, just because they can be produced cheap, does not mean that India can produce them or India is producing things of value. So we have a very poor industrial base right now. Why? Because again, like, I'm in a very good case study, and here's a tweet that I've done, that Reliance, which is a multi-billion-dollar company in India, it wanted to manufacture, not assemble, manufacture something called as lithium-ion batteries. And for that, it required a critical piece of technology from a Chinese player. So it was going and negotiating for that deal that, hey, we will license your technology. License means that, hey, we'll pay you whatever revenues we are making, we'll pay you a part of that, but give us your technology. Okay. And that's a very small, like maybe 1/20th the size of Reliance as a company, that startup. It said that, you know what, screw you, right? We are not bothered, okay? We are not going to share our technology with you. Maybe Chinese people intervened or not intervened, all that stuff. So what these type of episodes do? Well, they stop everything, okay? Basically now, because India does not have access to lithium-ion battery, there is no focus on that technology. We will assemble it, right, either for the US or Chinese guys. And who will keep the most margin? US or Chinese guys, okay? So I'm not saying that nothing will happen in India, of course, but we will become an assembling base, right? That is what even Vietnam is doing. It's an assembling base for China. Now, India, because of its, in a way, like non-commitment to either US or China, it's not clear which side India will side on, right? And it's a difficult problem for India to solve. But long story short, because we are on the topic of reindustrialization, long story short, what is happening is that we are not getting access to critical technology. And as a result, we will export less and less. And as a result, our currency falls. So our currency falling is only beneficial when we have things of value that we can export. And unfortunately, we are not in that scale. Now, some of you will jump again, right, in the comment section that, hey, we are the pharma capital of the world, this, that stuff. Cool. Okay. So how do we make our pharma? Our dependence is on API. The first step of producing pharma or pharmaceutical goods is to get access to active pharmaceutical ingredients, which are called as API. Now, China controls a major supply of that to us. Now, the day they stops, आप sloganबाजी करते रहो, उससे तो कुछ होगा नहीं. So this is where we are, right? I'm just telling you, like, to understand this issue a little bit more structurally. Now, if you take a look at 2025, AI has been the biggest contributor of GDP in the US. If you take tech plus AI in the US and look at its GDP contribution, then it's very obvious that AI plus technology is going to be a massive puller of GDP in the US going forward. Now, that's a very important point. Why? Because who controls AI plus technology, right? These would be multi-mega billion-dollar companies like Amazon, Meta, all these, like, hyperscalers, Google and all that stuff. They're already working on the next set of products. So now all these companies, there is a very clear path of growth. There is no confusion from a focus point of view. US is already working on things like stabilizing USDT, bringing in more fairer and clear crypto regulations. So they are biggest backers of BTC. Okay. So long story short, what is happening is that in the next 10 years, you will find a lot of contrary information on global reserve currency status of the US. Will the strength of US dollar come down? Yes, but it will be offset by the growth in real GDP in the US. Last year, the GDP numbers were good. This year, they are going to be fantastic in the US, okay? Now, you can call it artificial, this, that stuff, but long story short, as long as the real GDP growth is there and a very clear path of growth is there, companies will stay. Because what you have to think about it is, and this brings us to the debate of India posting like whatever 8.5%, 9% GDP growth rate. Our GDP is growing so high. Our finance ministers ask that, what our GDP is growing so high. Why is it that foreigners are not investing in our country? The reason is very obvious. There is no focus on growth. What's the next big thing that our country is doing, right? So that's the problem that we are facing. In the US, in China, the answer is very clear and obvious that they are focusing on their AI policies. They are focusing in terms of winning this reindustrialization race. We are planless people, okay? So है ही नहीं, कोई plan ही नहीं है, right? I mean, industrialization हो जाएगा, right? And all that stuff. So there is no head or leg to what's happening, okay, from that lens. So anyways, I hope that this point is clear, that in the next 8 to 10 years, there will be fall of US dollar, no doubt about that US dollar will weaken. But that weakening of the US dollar will actually help the real growth of GDP in the US, which kind of points to reindustrialization, okay? Now, again, going back to this topic of factors of production, okay? Now here, if you study like 4 factors of production: land, labor, capital, entrepreneurship. Labor was the biggest bottleneck for US and China, right? Why China? Because when China started manufacturing, the cost of labor there was very cheap, okay? But as per capita GDP of labor or anyone in China went up, even labor demanded more and more money. That's how per capita GDP improved. So labor became a bottleneck for China also. But now if you can replace humans with AI, the cost of labor is theoretically zero. Okay, so from that lens, China and US are trying to win that labor race, and therefore they don't require countries like India anymore. So India is just floating in the middle, right? And we are not going anywhere from that lens, okay? So then comes, where does India fit? Well, we don't know, right? Because we don't have a plan which we have communicated to the world. We have not raised our hands and gave a very clear indication that can be believed by the world that we are serious about something, okay? For example, it could be cleaning up corruption, or it could be that India is trying to win the pharma race. It's doing some really innovative work there, etc., right? So we have no plan. Every day there is like some weird plan going on that one day we'll say we'll become like Viksit Bharat by 2047. Then second day we'll announce by 2037. Then, okay, we have $45 trillion economy. And it's just like, at this stage, this is just depressing, okay? Now, some people comment that, hey, we have a very big population. Isn't that an advantage? Yes and no. It could be an advantage. It could be a disadvantage. It's just a tool, okay? So for example, a big population is only useful if they can create some kind of arbitrage for our country, right? Now, again, that 2000 to 2015-20 era was a very good phase, right? Because we had a fairly big chunk of our population that was adding a lot of value to IT exports, right? So that was great, right? Our population helped from that lens. But going forward, we have to start thinking that where is it that this population is going to add value to when we look at the world from a world lens, okay? So I'll just take a pause there. So that brings us to the next topic of conversation, which is the role of gold, commodities and hard assets and fall of US dollars. Because, if you start watching like Palki Sharma and all that, every day, US dollar fell, it's going to collapse, that stuff, that's just bullshit, okay? Now, basically, like I've been saying right from the year 2022, I myself have aggregated a lot of real estate, okay? So across the world now, right? I have bought 2 properties in UAE, I've bought multiple properties in Goa, land, villa. Land villa has gone up dramatically. Go and check any region that you like. No land villa has lost value, right? It has actually doubled, right? The properties that I bought in 2022, if I look at the results up until now, it has done really well. That's the concept of hard asset, okay? Now, whenever currencies go down, right? For example, when USD will lose value, hard assets in the US will gain value, okay? Whenever US dollar falls down, the US equities will rise faster to compensate, okay? This works. This is counterintuitive, but this is how it works, okay? When INR falls compared to US dollar, the INR denominated hard assets, for example, Indian real estate, will go up. Now, please do not confuse when I say real estate with a township 2 BHK that you might have purchased. That's a useless product, which you have already bought at an inflated price, okay? So I'm not talking about that crap like real estate, to be honest there. What I'm talking about is useful, high quality investment in a certain country. Okay. Now, the way this economics works is very simple, that going forward, what is going to happen is that as a currency loses its value, right, buying power, so cash is losing value fast. For example, the buying power of $100 is getting lost, right? Really fast pace, right? Let me give you an exercise. So let's say that I'll give you $100 today, but from starting tomorrow, every day it will lose $1, okay, or $1 of value. What will you do? You will say that, fatafat, I have to convert it into something. Now, what is that something? It could be gold, silver, whatever commodities. It could be US equity. It could be US real estate. It could be Japanese real estate, whatever you like, okay? The point is that you have to use your money in order to buy assets. People have overblown like gold and silver that is the only two assets that are going to survive in the world. Great, congratulations. People who are invested in gold and silver, they have made really good money. But it's not as if that US equities did badly in the last year. I myself am sitting on like 45% profits on it in 1 year or less than a year, right? So it's not as if that I've struggled in terms of returns. People who have really struggled is the ones who have just saved in US dollar and have done nothing with it, okay? Ki bond mein laga diye and all that. So those are really slow growth assets. If you have a habit of doing like PF, EPF and all that stuff, unfortunately, your wealth will get wiped out. That's a fact. That's where we are heading. And this is not something that I'm bringing up now. This is something that I've been saying for years now, okay? Now, okay, will the stock market continue to thrive in such an environment where there is so much uncertainty, so many problems, all that stuff? See, the answer is a yes, okay? Why? Because, for example, if in a country, the inflation is high, then what ends up happening? Well, it reflects into the stock market, okay? Let me give you an example. For example, this year, Venezuela has been one of the best performing stock markets, okay? Why is that the case? Because their currency has depreciated. So if you look at the total returns of their markets in local currency, it's massive, okay? So what I'm trying to tell you is that there is an inverse relationship between stock market and a country's currency. So if a currency of a country falls, then the stock market typically goes up dramatically, okay? Because that asset becomes cheaper to buy, okay? That is how it goes. Now again, some of you will say that, oh, by that logic, Indian stock market should have done really well. It has not. Why? Again, because again, that economy problem, that stock market does not work just on this matrix that, okay, currency down, stock market up. It also works on if people are feeling bullish on investing in your assets. So in the US, it's a separate story that you have high quality assets or availability of high quality assets in the stock market. For example, Meta, Amazon, all these are very well capitalized companies, right? And they do exceptionally well, right? Their corporate balance sheet is very clean. They have access to huge amount of money. For example, if you look at the total spending by Meta in the next 3 years, it's close to $600 billion, $600 billion, okay? If you aggregate all 50 stocks or top 50 companies in India in the next 3 years and look at how much money they are going to capitalize or spend on capital expenditure, it's less than $500 billion. So one company in the US spending more money compared to all 50 companies in India. That's the reality. You can check it, okay? So this is the bottom line, that American assets are going to be good, right? Counterintuitively, this looks very counterintuitive, but it is the fact, okay? Global investors are going to do exceptionally well. More importantly, you have to diversify. So let me write this section out because this is important. So how to diversify? So for example, if I have $100 or 100 units of money, where will I put it? So I'll put almost 70-80% of it. Now I'm a high risk investor. So let me give you a more conservative estimate. So for a conservative investor, maybe you can put 50-60 units of that money in American equities. Now within that also you can diversify. For example, there is a company called as Melli. There is another company called as Neobank. There is another company called as Grab. Now these are Southeast Asia, Latin America based companies which are listed on the US market. So even if you are buying an asset in US dollars, you can still diversify, okay? By buying all these global companies and get global diversification. So this is literally point number one that I will do. Number two, I will have some kind of hard assets, right? So for example, it could be a small patch of land, small plot, okay? That's very useful. If you can't buy land, buy a little bit of gold, silver, whatever you can potentially do. Do you buy it now? I don't know. It's highly speculative. I'll wait for a pullback and then buy. But whenever I can buy hard asset, I will do it, okay? If you can diversify a little bit into cryptos, right? Why? Because US is pushing the crypto narrative. That is important. Keep less exposure to Indian equities. I'm not saying that don't buy any Indian equities. I also have exposure to Indian equities. But given that we are not aligning either with China or US and next 5-10 years look very worrisome, I would play India as a trading market. Okay, so whenever I can buy equities cheap, I'll buy it and I'll hold on maybe for a year or two, then flip it to another segment, so on and so forth. So for me, India is a diversification play, and that's how you should look at it rationally, right? This is where I'll stop. I hope you enjoyed the conversation. You learned something insightful. If you did, do drop a like, comment, do share it with your friends, because this is a topic that is very rarely discussed, analyzing macroeconomics, geopolitics, and piecing it together. I've tried to do it. I hope you liked my effort. If you did, do press the like button, and I'll see you soon.